Maximilian Kunkel, Chief Investment Officer, Global Family and Institutional Wealth, the UBS. Good afternoon.
Hello, good afternoon.
Thank you for being with us, Maximilian. It's a pleasure to have you with us in Negocios Televisión. To start, can you explain the central idea of escaping gravity for the global economy in 2026? What would need to happen to see this scenario materialize?
Sure. The basic idea here is effectively that as we enter 2026, the world stands at a crossroads. And the question is really, can momentum in AI and innovation help markets and economies achieve escape velocity, so breaking free from this gravity of rising debt, political uncertainty, and lingering inflation? Or will these forces pull us back to earth? Our thinking is it will be absolutely critical to see that AI, both in terms of investment, but also monetization and broadening out, will continue to do what we're expecting it to do. At the same time, also, will be absolutely critical to see growth more broadly starting to go beyond tech, and of course, for monetary policymakers to continue to lean dovish.
Maximilian, the structural growth constraints, if you had to point to one major structural constraint on growth, which would be the most decisive today, debt, demographics, or deglobalization?
I think deglobalization is a big topic these days, although I would be relatively careful with this one, because deglobalization as such is not really what we're seeing. I think what we're rather seeing is regionalization. And regionalization, at the core of it is actually making things more inefficient. So I think this, yes, is a constraint on growth in the short term. And the other two that you mentioned, debt as well as demographics, I think they're more longer term in nature and their impact on overall growth trajectories.
And as the cycle engine, the AI, why does artificial intelligence remain the central driver of market scenarios for 2026? How is AI evolving from infrastructure investment to monetization through software and applications? And Maximilian, how does this shift the opportunity landscape?
Yeah, I think it's absolutely critical still to look at AI and the broader tech space when we look at the broader trajectory of markets. Why? Because tech and communication services nowadays make up 36% of MSCI All Country World. So it's absolutely critical to look at this. And as you already alluded to, when you look in the last 2 years, the main driver of tech was investment. We had Capex in this space being about 3 times as high as expectations were. Our thinking is that Capex is going to continue to be very strong in this space. We're looking for more than 4 trillion of additional Capex through 2030. But what you've just alluded to is important. The market has spoken a very clear language over the course of the last 5 to 6 weeks, and that is we're moving away from Capex towards cash flows. So it's no longer about rewarding higher investment in AI, but it's very much focusing on monetization of AI. And here we think the focus should be on companies that can use AI to reduce costs and increase revenues. And there's really 4 critical cases here in the very short term that can see benefits. Advertising, research and development, customer service, and coding, and that should also be the focus in our view.
Maximilian, according to Global Macro Outlook, what is your macroeconomic outlook for 2026, and what does it imply for equity markets especially?
There's 2 elements to this, I think. The first one is what are we looking at in terms of growth, and what are we looking at in terms of inflation and rates. And when it comes to growth, what we're effectively looking at is a re-acceleration of growth into especially the later half of 2026. And it's principally coming on the back of still very robust consumer spending, but more importantly also improvements when it comes to the Capex cycle. Think especially, for example, the One Big Beautiful Bill and the tax incentives here given when it comes to Capex in the United States, fiscal engagement in Japan, partly in China, and certainly in Germany. But we think it's also to do with a reduction in uncertainty when it comes to trade. Now, on the inflation and rate side of things, outside of the United States is a very boring story. We've seen inflation come down and central banks follow it down. From here, we think both are going to stabilize. In the US, we believe in the very short term, because of tariffs, there may be an uptick in inflation, but it's probably going to be more short-lived because services are still trending down and they're more highly weighted in inflation indices. And as a result, and also partly because the labor market is weakening, we think the Fed is going to cut. So all in all, I would say we're looking for a re-acceleration of growth, particularly into the latter half of 2026, and central banks still leaning dovish. And that, of course, is positive for equity markets.
And Maximilian, looking by region, US, Europe, Asia, where do you see strengths and what could surprise investors in 2026? Where can be the expectations also for the US dollar, and which currencies could benefit 2026? Which are the risks?
So I think, first of all, in terms of equities, because you asked about surprises, I think everything that's not to do with US tech could surprise positively because everybody seems to be so focused on this space. But also within US tech, there may well be surprises. I just hinted at it. Our view is that one should increasingly start to focus more on the application layer rather than the infrastructure part when it comes to AI. And outside of that space, look, region-wise, we see opportunities in China in particular, China tech, where we're looking for 37% earnings growth next year, and valuations are rather adequate still. We think that Europe, where people have become quite negative of late, is likely going to do well. We're looking for 7% earnings growth here next year and 18% the year after. And equally, we also see an opportunity in Japan where this mix of fiscal stimulus, better earnings growth, and improving return on capital should bode well. Now, in terms of sectors, I would think that with this going beyond AI continues to be an important part of portfolios. So AI needs to be a critical part of it, but you increasingly want to look at the areas where AI can be used. I think in particular healthcare or the broader longevity theme, which is still very attractively valued and should see benefits from that coming through. On the currency side, which you just asked about, we think that the dollar is likely going to weaken without necessarily becoming weak. So we are looking at 120 in due course over the course of the next few months against the euro, largely because of a reduction in the rates differential, so the Fed cutting and ECB staying on hold. However, remember that fair value, so purchasing power parity, is around 125. So this is still a dollar that is overvalued, and that's our expectation.
Maximilian, thank you so much for being with us tonight at Negocios Televisión. We really appreciate your time here. Maximilian Kunkel, Chief Investment Officer, Global Family and Institutional Wealth at UBS. Thank you for being with us.
Thank you for having me. Thank you.